Thanks so much, Sam, for joining us. I think more and more we're seeing the spotlight cast on the foreign exchange market. When we hear that there's weakness in the parallel market, people begin to get concerned. Help us appreciate what exactly is going on. Why are we seeing that weakness in the parallel market? Because for all you know, if this continues, it may spark a lot more demand that could cause even more weakness in the official market.
Good morning, Wale. I think people should understand that we're in a market. Prices will move up, it will come down. And one thing we should always look at is the outlook and the reason behind the noise. I always tell people that we're in Africa. In Africa, there will always be noise. People should just be able to understand the reason, the underlying why the noise is.
Sure.
If you ask me, I think the reason why you saw some move in the parallel market last week was because the central bank, I think they missed one of the sales, or they did not sell to the BDCs. And that immediately triggered off some buying, thereby causing a rally in the price, which for me is just speculation. The CBN actually responded late, over the weekend. They came out with a circular to say, look, we're going to be selling Mondays, Wednesdays, and Fridays, three times weekly. I think that is going to calm the market. That is going to calm down frayed nerves, and we expect that the pricing in the parallel market should be stable, if not show some appreciation.
Right, so we look forward to that. But then let's talk a bit about even the I&E window, because there has been some moderate volatility there as well. Some people have spoken to speak of the spreads expanding a little bit recently. Foreign investors beginning to sell from the fixed income market and perhaps withdrawing some of that cash out of Nigeria. All this happening at the time that oil is still firmly above $70 a barrel. Is there any cause for concern, given the activities of foreign investors, that could trigger further weakness in the official market?
Well, what we saw in the I&E window is not, if you ask me, is really nothing to worry about. Rates moving from 360 to 362 levels. I mean, if there will be times where demand will outstrip supply. Those are short-term stuff. Most times, in recent times, we've seen more supply than demand. So we don't expect that to continue in the foreseeable future. There will always be times where you see, at least in intraday markets, in some overnight market, you find out that demand might outstrip supply. All we've seen in recent times in the I&E window is the whole effect of the emerging market. The emerging market, there's been a lot of risk-off in emerging market, and Nigeria is not immune from the emerging market scenario. Yeah, we might claim we're not a full emerging market, but trust me, when this emerging market risk-off happens, Nigeria will have its own fair share. And what we've seen is a lot of demand from the offshore who are selling their fixed income instrument and exiting because there will be that natural panic.
So you won't link the sell-off at all to concerns around the elections, because we've heard that argument being made by some analysts.
No. I mean, if you ask me, it has nothing to do with the elections. If these guys were afraid because of election, the pullout will be massive. So far, the kind of volumes we've seen, the central bank has been able to bridge the gap. Some of these, if you look at the profile of the sell-off, you also see some of the investors actually investing in the market at the same point. If there's a global, there's a risk of Nigeria because of election, you will hardly see flows coming in. And even if the flows come in, it will be nothing to write home about. But in some days, the flows that are coming actually match the sort of outflows that are going out. So central bank has bridged the gap at some period, but it's not been any significant volume that the central bank had to breach. But so rate moving from 360 to 362 for me is just the nature of the times. Okay, well, and I think based on our yields, Nigeria is still a place that investors are seeing good value.
I was just going to get to that point about the yields. Are they still attractive? Because even though many were calling for a cut in the interest rates at the last MPC meeting, that didn't happen. And from the tone, even from the communique discussed, released by the MPC and read by the governor, there is a sense that we're not at the end of that cycle just yet. We're not entering that era of lower rates. I think they would like to see inflation come down even more. So, given that scenario, will you still argue that our rates are relatively attractive?
Well, if I look at it just in nominal terms, a yield of 12 with a stable exchange rate, I think is still significantly attractive compared to where the alternative investment outlook is. But again, for us to say, is Nigeria still an attractive destination? You must compare it with other emerging market yields. You must compare it with the risk involved in those markets. And the exchange rate risk is also part of it. I mean, since the introduction of the I&E window, Nigeria exchange rate has been stable.
Yeah.
I mean, at least we've been able to achieve that stability. So when people factor in this thing, they look at that to say, what is the worst case scenario if we need to exit? How much yields are we going to shock off from the exchange rate perspective? And if it's not much, 12% is still a good yield, especially if you compare it around. So we must not lose sight of what other emerging markets or other frontier markets are doing.
Right. Just a quick note on the foreign exchange reserves, because I'm seeing that at 47.75. The latest data reported on the central bank website, slightly lower than what we saw on the 18th of May and the 17th of May. And people have always assumed that it will continue to move higher. What's your sense about the reason for that moderate decline?
Well, sometimes it could be timing issues. Some of these oil receipts are in the forward market, right? I mean, the demand on the I&E window, especially, the I&E window are mainly spot. So if we've seen some exit from the offshore space, it should immediately hit your reserve figures. If we've seen what the central bank is also doing from their sales forwards, I mean, a lot of the forwards they've sold maturing, it should immediately hit those numbers. So for me, it's nothing to worry about, at least in the short term.
Okay, let's talk about the outlook for yields, though. So we've heard from the NPC. What are your expectations? Maybe starting with the short end of the curve and then progressing to the bond market.
Well, the short end of the curve this week, I expect it to trend further south. Why? Because there's more liquidity in the market, at least the OFAC money coming in over the weekend. You have about 302 billion maturing on Wednesday from the bond auction. So I expect this liquidity to start chasing fixed income instrument, at least on the short run. And what then happens is that we might see a rally in the market.
And in the bond market, how do you see that evolving?
Yeah, I think we're already seeing buyers of bonds. Even the local pension guys are beginning to come into that market to buy. And that's all on the back of the amounts, the money maturing on Wednesday this week. 302 billion is significant. So I even expect for moderation for the central bank to come up with some OMO instrument to be able to moderate the level of purchases we might see in the market.